Let's talk about ETF today. ETF stands for Exchange Traded Fund. Many would say just invest in ETF, that's the best. But is it? Let's find out. Before we invest in an ETF, we need to know how many ETFs are there. Well, 3,030 are listed in USA. I am sure there are more listed elsewhere. We are not going to count them. Neither gonna look at all of them. We will just go through the process and tools. Using this you could screen an ETF. If I am not wrong, we all have already heard of few ETFs. VOO, VTI, SCHD, QQQ, right? Let's find out. The first thing we need to know is why ETF exist. I mean basically these fund manager taking our money and they invest in stocks. We can also do the same, right? Why people invest in ETFs then? Well, there are many reasons. One, it's the lazy way of investing. Some could say safe way too. Because it's difficult to beat the index funds, even if we actively trade. So for long term it's wise, just allocate some money to ETFs. DCA every month or week. In this way we don't have to worry about one company doing well or not, and one sector is doing well or not. We just put money into ETF. Let the fund manager do their job. But look out for expense ratio. Going back to talk details about ETF now. An exchange-traded fund, ETF, is a publicly traded asset, comprising a basket of underlying assets. For instance, Cathie Wood's ARK Innovation ETF, NYSE, ARKK, contains a basket of tech stocks, like Apple, Amazon, Tesla, Coinbase, Zoom, Roku, and others. Do we know when the first ETF came into picture and where? USA. No wrong answer. The first ETF appeared on the Canadian Stock Exchange in 1990. The popularity of the asset with passive investment strategies saw the asset class experience huge adoption and growth over the last 30+ years. In 2003, there were 123 ETFs available to trade on US exchanges. 20 years later, there are over 2,600 ETFs available. So from this we know it's not only good for us investors, it's also lucrative for the fund manager and their company. An ETF makes money by adding assets to the fund and riding upside momentum in the price action of the underlying stocks or financial assets comprising the fund. The fund manager banks on the assets showing annual growth for their investors, attracting capital flows into the fund, which they use to buy more stocks and provide liquidity to investors. ETFs are less volatile than purchasing single stocks. Therefore, they suit long-term investment strategies more than intraday trading strategies. However, not all ETFs are profitable. We know ARK is not. Rather, it's in huge loss. So if you are disciplined, your vision is long-term, you are ready to do the groundwork and could diversify, you can completely avoid ETFs. You can use your knowledge and time to buy individual stocks. But if you are starting now and no idea about companies, just heard of some GameStop millionaire and wants to start investing, then put at least 50% of your monthly investments into ETFs. Use Rest 50 to learn and pick stocks individually. Now for that 50% ETF investing. Vision should be long-term. Depends on your current age. Maybe 25 years or 30 years you want to be consistently investing. So let's go through some popular names. You might have seen so many videos. This ETF is better and that one is better. Well, there are a few better ones out there based on history. Like VOO, VTI, VUG. People talk about QQQ, but I don't like it because of high expense ratio. Recently people talk about SCHD as well because they pay high dividends. But again, expense ratio is higher and the holdings are not that great as per my point of view. There are a lot of websites to screen ETF. I use mainly two: ETF.com and PortfolioLabs.com. Let's have a look there. So here you can search for example VOO. Then you see the details, like the return for different time periods. For 3 months, for 6 months, 1 year and 10 year. Long term means we focus on 10-year one. Then if you scroll down you can see here the expense ratio, which is 0.03. Keep this in mind, we will use after few moments to calculate the return. Other details like the company behind the fund, fund's market cap, which index fund the track. You can see it's S&P 500. Now scrolling down further would give you info on the countries they are invested in. Then the sectors they are invested in. Further to the right the companies they are holding. Use this website and look for ETFs, find out what's their top holdings are. Maybe in next 30 years we will have a different technology boom and these ETF don't perform well. So better to check the holdings they have. Like if you see here, Apple, Johnson & Johnson, and United Health Group, etc. Maybe you would like some emerging market ETF. Because rest of the world is kind of booming and more opportunities could be there. There is an ETF VWO. Based on history it didn't perform well, as you can see here. It is also higher expense ratio, as you can see 0.08. 5 years flat. Max also nothing. But use this website, search for it. Now let's have a look at QQQ. As you can see it tracks Nasdaq 100 index. It is good ROI. As you can see here for last 10 years. Just look at the expense ratio here, it's 0.20. We will use these to calculate return on investment later. And it will help us to get the cost of holding this ETF. You can also scroll down here and check other details as mentioned earlier. Like the countries they are invested in, sectors they are invested in, and the companies they are invested in. You can click on View All and check all companies here too. Okay. Same goes for VUG, SCHD and others as well. Now for the investment return calculator, you can use any tool. I would suggest to use www.omnicalculator.com. It has so many tools to calculate. Just use the website and explore. In this video we will use expense ratio to calculate the rate of return. Let's navigate to www.omnicalculator.com. Expense ratio. Now initial investment 10,000. You can change as you want. But for this example let's keep it as it is. Yearly investment. Let's keep it 18,000. That's what I plan to do. Yearly expected rate of return. Let's use 10%. Now expense ratio. If you remember for VOO it was 0.03. And for QQQ it was 0.20. So let's take VOO example first and use 0.03. Duration let's keep it 25 years. As you can see the return would be 1.8 million euros. If you see below that total cost of ETF, 8,703 euros, that's very important. In 25 years that's how much will be your expense if you invest in VOO ETF. Now let's keep all other assumptions same. Same return. Same duration and same investment amount. Only apply the expense ratio of QQQ, which is 0.20. Now let's see how much is the return. Same 1.8 million euros. But now if you can see the expense ratio is crazy. Holy moly, it's 57,000 euros. Well, you can say maybe QQQ can return more than 10%. Let's make the ROI to 12%. Return will increase for sure, now it's 2.4 million. But so is the expense ratio. Now it's bloody 80,000 euros. Nobody knows what will be the return percentage. We can't say it will be 12 or 15%. But if you assume same return on investment, the cost is huge in QQQ. I hope you get to know something today. At least one parameter is expense ratio. Second parameter is the holdings they have. What are the sectors they are investing your money? Is higher expense ratio justified? ETFs also yield dividends. But dividends should not be the sole reason of investing in ETF. For dividend investing, it's better to buy individual stocks, where you have growth potential and also higher dividend yield. Stay tuned, guys. Subscribe to this channel. We will talk in future videos how to screen individual stocks as well. And dividend investing too. I will share my portfolio in regular basis too. And how it is doing. I also invest in crypto. Same DCA strategy. I have been doing this auto invest in Binance in couple of projects. We'll soon make a video. How can you do that and why DCA is the best for any new investor? Also for experienced investors. Thank you so much, guys, for your valuable time. I wish you all the best. Stay safe out there. Lots of love. Take care. See you guys on the next one.